Okay, folks, good evening. Tim Davis here, just getting in, and I thought I would come home and record an evening market review. Now that we have movement, we are out of a range. It is now 9:12 p.m. on Thursday, June the 9th, 2022. And I'll go straight to the Dow Jones E-minis right away to point this out. So I've been highlighting this range that we've been in since the end of May. I said eventually we would break out of this range, either to the upside, to the either up or down out of this range. My bet was that we would break down since we are still in this bear market. And voila, what do you know? Here we go. We're starting to get the breakout of the range to the downside. So now, where to now? Well, let's expand this out just a tad. We're going to switch to another angle here. All right, here you go. So here is the downward channel that we have been in since the beginning of this year. Top of the channel to the bottom of the channel. Draw this out. So we've been in this downward trending channel for quite some time since we've been in this bear market since the beginning of this year. Bottom of the channel, back to the top of the channel, back to the bottom of the channel, to the top of the channel, back to the bottom of the channel, back to the top of the channel. Where to now? I think we're heading back to the bottom of the channel. So with that said, nothing much else to tell you except for be prepared for the next down leg. So this is the Dow Jones E-mini, so we could possibly head downward and possibly break below this previous low and create another lower low. So there's something to watch over the coming weeks that we could be on this downward move for a minute here till we reach back to the bottom of the channel. That is what is possibly in store. We got a couple of catalysts coming up that can help fuel that. Tomorrow we have CPI numbers that are coming out at 8:30, and the next week we have the Fed minutes and the Fed speak next week on Wednesday. So those are the catalysts to look forward to. Again, if you have been setting your portfolio up properly, I have been holding on to a lot of put options and a lot of positions that would trade this market to the downside on the next leg, and they are working out fine right now. So I've been giving out these reviews probably at least every weekend and a couple of days throughout the week, just to prepare you ahead of time for what we could possibly see in the near term. And this range I've been following since the beginning of the year, and it's been working out like a charm. So if you've been following this range with me, then you've been able to make out with your positions by positioning yourself accordingly and appropriately. All right, let's switch to S&P E-minis. Same type scenario. Again, we have broken out of the range, broken back below the 20-day moving average, and now price action is heading downward. There's not too much more to say there. Now, could the bulls rally and push right back into this range again? That's a possibility, but I doubt it. That is a least likely possibility. I think we're going to probably continue to see this drift downward. Let's look at the NASDAQ. All right, here's the NASDAQ, same scenario. We have broken out of the range to the downside, and we're heading back down. The Russell 2000. And the Russell is also broken below that range. Russell is kind of tighter to that 20-day moving average than the other two. So we're going to see what happens, but still think the momentum is shifting towards the downside on all the major indices. Now, if they are shifting to the downside, what about the VIX that I've been telling you guys to pay close attention to, because the VIX was hovering right around a level of support at its 200-day moving average? Well, wouldn't you know, there we go. I said eventually the VIX was probably ready to bounce off that trampoline. And look at that big green candle that the VIX got on today. Not only did it get a big green candle today, but look at the full wins percentage and the full stochastics. They are all starting to point up on the daily chart to the upside. So we got that big bounce off of the 200-day moving average on the daily. We got the wins percentage moving out of the oversold territory, heading higher. And the full stochastic is not quite out of the oversold territory. So that lets you know there's still more room to the upside, but it is almost there. It is almost there. And RSI started to turn up as well. So the VIX is starting to get a lot of positive momentum, folks, with two catalysts coming up. So that is a telltale sign and a warning all in itself. You got the VIX that were hovering right around support with two catalysts coming up that could give the VIX more fuel to its fire. All right, so that is the VIX. Let's take a look at the VIX futures. Again, you see VIX futures on a rise. We are now about to approach the 50-day moving average again. All right, so the VIX is showing some movement, folks. And like I pointed out before, if we get back above, let me stretch this out. We get back above this 50-day moving average, I think we're going to be heading higher to possibly head towards the big tests. The big tests. I think eventually we're going to head up towards that 39 to test that level over the next couple of weeks, I believe now. That's a possibility, so pay close attention to that as the VIX starts to rise. We could be in a longer term rise back towards the top of this channel. All right, we got two catalysts coming up, so it has the, it has the batteries that are about to be inserted to do so, with the CPI data on tomorrow and the Fed speak next week. So let's see how that pans out. But again, the VIX is bouncing. It is bouncing off of that 200-day moving average on the daily chart. All right. Also, want to point out market breadth tools that I like to use. So the first one we'll take a look at is SPXA 200R, which tracks the percentage of S&P 500 companies trading above their 200-day moving average. Also, last time I shared this, I also told you guys that it was also in a range, or in a downward channel, should I say. So here's a downward channel that this tool has been in on its daily chart for quite some time. And I said that we need to pay close attention to that 50-day moving average, because price was having a problem. Percentage was having a problem breaking above that 200-day moving average. Now look what it did, heading right back down, heading towards the bottom of the range. The percentage to look out for a possible breach is that 22 level, Let me draw your attention to the bigger chunks. I told you eventually with this percentage, I think we're going to see what we've seen in 2008, 2009. That's just my thought process. See my arrow down here I got drawn? That is my lower target around for this percentage to get all the way down to 0. I think we have more than enough ammo to get down to 0. And like I pointed out before, that every time, this is a monthly chart, I believe this is a monthly chart. Every time we have reached upper band of this particular indicator, or this tool that I like to use, this percentage tool, look at history. So this is, we got as high as 97% back in 2021. Every time we've got up towards that level, closer to that 90, above 95, the market has sold off. The biggest example of that is what we experienced in 2007. And as you can see in 2007, we got all the way down to that 0 mark. I think we're heading down to that 0 mark now. We are in a perfect downward trending channel. We've been in this downward trending channel, folks, since 2021, since the beginning of 2021. And now we're starting to get the 50-day moving average is starting to roll over. So momentum is definitely shifting in favor of the bears all the way around, no matter how you slice it or dice it. So prepare yourself accordingly. One more tool we look at, then I'll be done with this video for tonight. Real quick, because I was just waiting for a trend to start to form again since we've been range bound, and I think we finally got that trend. All right, for those who don't have access to this Wall Street Journal tool, which tracks their highs, new 52-week highs and new 52-week lows, where you can also get a sense of what the overall sentiment of the market is by looking at this market breadth within the Wall Street Journal, this Wall Street Journal tool. If you come to my Twitter page, if you have not befriended me on Twitter, please do so. Here's my Twitter page. Let me go to the front of my channel so you can see what it looks like. All right, it's at God's Child Tim, at God's Child Tim. And at the beginning of my Twitter page, I have this link to this Wall Street Journal new 52-week highs, new 52-week lows data tool. In that, you'll come to this. And what this allows you to do is to see the new 52-week highs and the new 52-week lows of the New York Stock Exchange and the NASDAQ. The first one we're going to take a look at is the NASDAQ. I'm sorry, is the New York Stock Exchange. So the very first set of numbers that we're going to see the new 52-week highs. This was showing you is how many new 52-week highs were created during the time frame of this particular tool when it had its last reading. So here on the right-hand side, you'll see the last reading was recorded at 4 p.m. on June 9th, 2022. And as of that time frame, the New York Stock Exchange saw 12 new 52-week highs. Now, if you scroll down about halfway, you'll see how many new 52-week lows. Look at that, 111. So now we have the new 52-week lows outweighing the new 52-week highs by a large margin, folks. That's also another bearish signal. How about on the NASDAQ side? Let's take a look. Click on the NASDAQ. So the NASDAQ has created 26 new 52-week highs. And as we scroll down, we'll see how many new 52-week lows. Wow, look at that, 180 new 52-week lows. So all the momentum has been shifted back to, or should I say back in favor of the bears. All right, so there you have it, folks. Prepare yourself accordingly and prepare your portfolio. Set it up in the best possible way so that you can continue to see gains. Because remember, folks, there's always something to trade within this market. You can trade this market to the upside. You can trade it to the downside. There's multiple tools out there you can use in order to take advantage of whatever the market is showing you, whatever the market is doing. So don't be stagnant. Don't sit around trying to be a buy, hold, invest in this type of environment and lose a lot of money on the way. You know, you can always make money on the downside as well as the upside. So there you go. There you have it. All right, folks, this is all I have for you guys for right now. Until the next video, enjoy your night, and I will try to catch up with you guys on tomorrow. And just be careful navigating through this market, and please learn to trade this market to the downside as well as to the upside to see consistent gains in your portfolio. All right, folks, enjoy your night.